What is up, guys? It's your boy, No Risk, No Premium, back with another episode of a excuse me, minute drill. Sunday sermon edition, guys. What is up? What is happening? Hope you're having a great week. I am recording this on Saturday because Sunday I have to help my mom with a ton of shit all day. But nonetheless, guys, good week of trading, but a very tricky week of trading. I just want to repeat this again. I said on last one, if anyone is saying this is an easy market, that is not true at all. Okay, that is not true at all. This is a tough market. So if you're thugging it out, right? First off, congrats. Second off, keep on going. Okay, keep on going. First things first, our levels are still holding. I just want to talk about the big macro levels. Okay, first from just a market stage, we can see we had our stage one, stage two, stage three, right? Stage one is accumulation. Stage two is the breakout or upward trend. Stage three is distribution. Okay. And then stage four is downtrend, right? So we can see we've broken out of this distribution phase up here and have made our way lower. Okay. Now, what have we done? What things have become very apparent that the market is respecting? Okay. If we just zoom in here a tad, like so, right, makes it a little easier to see. We can see first off, the 50 MA was very much defended as the purple dotted line. Okay, once we broke through, we went down and tested into where? This 200 MA, which is this kind of bluish teal line. Okay, and they have the 100-day down here as well. Okay, so huge levels are still going to be all the same. 390 to 388. First off, we have the 100-day moving average here, but we could see, right, that's where we have huge support, probably some demand left down there that I think we could see some buyers come and step in this area all the way from 387 to 390. You have to be a trader in that level, but we see 200 MA is still 393, 50 MA is still 396. Now, since we're putting in a little bit of a hammer here at this bottom, okay, if we can reclaim this 50 MA pretty much over 397 early in the week, I fully anticipate a attempt to get back up to these huge MAs up here. Okay. Anything that's a dotted line on my chart is an MA, simple moving average. Anything that's a solid line is an EMA. Okay. So this blue dotted here is the 5 SMA. Okay, but we have the 8 and the 21, 8 being the yellow, 21 being the the 8 being the yellow, 21 being the red here. That is your EMA. We can see we actually had a cross down and we had a cross down of the 5 over the 20. Those are two bearish signals. That's great. Is it indicating we could possibly be having some stage 4? Absolutely. The market and price is telling us it wants to try lower. Great. Since we've been stretched down so far, do we respect these levels like we have so far and possibly get a bounce up? Absolutely. I think so. Okay. So for me, I would watch a breakdown of the distribution zone, right? Which is about 405. Okay. But you have your 8 and 21 EMAs, right? At 402 to 404. So after 400, it gets really hairy because we have so much confluence in here that it's like 400, 402, 404, 405, 20 MA is at 408 pretty much, right? And 408 is also this gap here, right? So there's lots of things above that says maybe we have one more trip pop up, okay, before we head down. It's very possible. Okay, then you ask yourself, hey, what can drive the market from a macro aspect? So you always want to go check what's the market data going to be coming out this week. Okay, this week, Monday, pending home sales. That's really what I'll be watching. Okay, then you have a Fed speaker Monday. Tuesday, okay, Case-Shiller home price index. Okay, you have the Chicago Business Barometer Confidence Index as well. And then you have another Fed speaker coming on, Kashkari on Wednesday. Construction spending will be interesting because construction usually gets the highest budget or the most spending in a booming economy. Like, again, all of these are helping us understand the macro of what's going on. We understand the Fed is continuing to tighten and raise rates, that inflation is hot. PCE data came in hot Friday, right? But we still have a hot jobs market. We have people spending still. So we're all just kind of in this big wish-wash of what's actually going to happen. Who's lying, right? Who's lying? Is the job market's going to actually cool off? Okay, will people become unemployed? Will they start spending less? That's the hopes of the government. I mean, sorry, that's the hopes of the Fed to slow the economy down. Okay, to slow inflation down. But it hasn't been seeming to happen yet, right? Then we have initial jobless claims. So we have one of the first things that the Fed always looks for. They're going to look for what is any price index, so PCE, PPI, CPI, okay, then jobless index, okay, or jobs added, anything that has to do with jobs, unemployment, jobs, whatever. Those are the two things they look for. Okay, they look to see if they can control the prices of things and if they're how that's affecting the job market directly with them raising the Fed funds rate. On to Friday ISM services, and we have two Fed speakers there as well. So nothing huge, like no CPI, no FOMC, no POW, but we do have data that comes out. We can help understand the macro a little better. So that's always good because holding positions overnight when you got big economic data coming out, like for example, right? This, I would say, this looks like the start of the reversal right here, right? Maybe starting holding the 50 MA, taking us back up, right? And then look what happened. PCE data came out. So if you didn't know that overnight, right? If you didn't know that overnight was coming, you're like, hey, this looks kind of bullish. And then we gap down. So that's why it's important to always understand if you're going to be swinging anything short dated overnight, you need to know what can drive the market or move it and drastically move it, gap it up or gap it down, or keep the momentum going. So with that being said, we just went through the economic data. That's great. Okay. Now back to the chart. As long as we hold 390, okay, you have to think as long as we hold 390, the market structure is saying again, we're going to continue to what? Pretty much make higher lows. Okay. Now this pullback, so we want to really hold 390 to 393. Underneath 390, I think we get floodgates. Big floodgates to a 380, 378, 380 test again. And ultimately under that, I believe 370 and then 360 and then maybe 3. That's if we want to accelerate. Okay. Now we've had all these MAs, right? We've just been chopping in this range. So it's been hard to have any follow through. Is it setting up here for us to come back down? I don't know. Maybe we'll have to see. All we want to trail, I'm worried about today and what could possibly happen and open the next day. That's it. But realistically, I'm worried about today. So today is telling me, okay, we're still trying to put in a higher low. We have some buyers that became active. Okay, we're holding the 200 MA, typically a bounce spot, right? If you're in the Wolves of Wealth, community, everybody look very doom and gloom all day. And I just said, I can't short the 200. You can't short the 200 MA. You just have to respect it. That's a bounce zone. And what another thing about, having a tough market is, look, it really looked like we were just drifting down all day, right? I mean, just go to this 5-minute chart. There wasn't any really bullish sign here, right? It was just like, oh, let's just keep on making new lows and keep on making new lows and keep on making new lows. And then finally we got a pop it that we just kind of kept, right? It's been a tough market. Okay. There's still a smash and grab environment. If you're going to be looking to trade momentum, you have to buy time. Buy further out expiration. Okay. So total plan for this coming week and specifically tomorrow. I want to see the previous week hold, which happens to be the 200 MA. I would like to take a double bottom off that if possible, or just maybe a dip down to maybe have some more liquidity. I'll look to see if we can get a bounce there. Then levels you target 400, 5 MA, 402, 80 MA. Okay. 404, 21 EMA. Okay. 405, 404 happens to be a big breakdown spot as well. And then 405, 408. Okay, 408 has a huge gap, and you also have the 20 MA. Are we going to lose the 20 MA and possibly go back test it before we come back down? I don't know. Right? I don't know. Two other situations you can look at are scenarios as well, right? You want to look at a Fibonacci, you take it, hey, what's the recent swing low to swing high? What could we pull back for a healthy pullback? Well, if you look here, we were holding this 50% retracement very well. Happy to be where the 50 MA is too, right? Holding that very well. Then we gap down to the 200 and we have 391 as the 61.8 all the way to 384 is the 78.6. So I would look to possibly have this 390 to 391 hold, which would be the 61.8. That would be healthy for a pullback. Okay. Then you can look at it the other way as well, right? You could be like, what did we just do? If this is the recent swing high to this recent swing low, where could we pull back to have continuation down? Well, look, 61.8 is right here at this 408 level. We know that's a huge level. There's a gap fill there. Okay, 20 MAs there, kind of matching up. 50 MA is the 405, 404. Interesting. Okay. All just situations I'm possibly painting. I'm not saying that any one of these things is going to happen. I'm just saying, look, if this, then this. That's all the market is. If this, then this. Okay. If this, then this. So if 393 and the 200 MA holds, we're going to target, right? 396, get back through the 50 MA on the daily. Okay. And make our way up to the 5 MAs, 400, 402, 404, 405, 408. Boom. There you go. You have it. Easy as could be. Last thing I want to do is just really zoom out. Let's just really zoom out. And let's take a look at this monthly chart. Okay. Whoa. What just happened? Whoa. I don't know what happened. Okay. Sorry. Wow. That was. I just want to show. Look how big this 410 is. 412. Okay. I mean, back test, breakthrough, back test, back. I mean, we haven't gotten anything above. Look where we went to go touch on the daily as well. I mean, on this monthly here, the 20 MA is 419. Looked at this level we seem to be holding, right? We don't want to get up above, right, on this monthly chart. So does that mean we possibly come back and test this 384? I think so. Just what the chart is saying, any pops that stay underneath that stays underneath 405 to 408, you probably want to fade those. Okay, fade those. So it's for me for this month. I mean, not for the month. This month will end on what will end on Monday. No, it will end on Tuesday. Short month this month, February. I mean, now we could, if the next 2 days was like all the way down, that would be interesting. We could get a candle like this one, right? Nice candle down. Look where it's kind of fallen to. And then the next candle, March, maybe we get a pop and then all the way back down. I don't know. Something to notice that 410 to 412, we do not want to get to that or have any candle closes on the monthly. Weekly chart. Okay, weekly chart, we're breaking out of a double inside week. I mean, not of a double inside. We're breaking out of this. We had a bull flag, honestly. Had a bull flag here, and then we had the gap down. Okay. We're holding, right? We're going back into all these EMAs. You can see how this is just a cluster fucking here. It's probably going to be choppy until we have a true break of somewhere. Okay. Until we have a true break of somewhere. So noticing that, right? Check the monthly chart, really zoom out, take a peek and be like, yo, this 410 to 412, we do not want to have any closes above there. That is interesting, right? The market wants no piece of that. So do we possibly get down March or even down into 380? I think so. Okay. But it doesn't matter what I think. It just matters what the market does. All right, guys, that's all I got for you. I hope you are having an amazing Sunday. I hope you have an amazing weekend. And I hope you're ready to come back and kill it this week. Okay. So remember, on Sunday, you want to get your shit together. You want to get your levels right. You want to prepare for the week, all your charts. Okay. And then Monday comes, you want to wake up early, get your levels right, and don't do anything fucking stupid. We'll see you bright and early.